Closing bell 4 minutes away. Markets may be lower to close out the week, but if you believe the January barometer, the old as January goes, so goes the rest of the year, 2026 is looking good. The Dow closing out January with a gain for the 9th straight month. That's its longest win streak since January of 2018. S&P and NASDAQ also higher on the month. So what got us there? Which names powered the market's month-to-date rise? If you own any of these stocks, you are happy. Micron, Moderna, and Seagate. Those are the laggards, but Micron, Moderna, and Seagate are the ones that saw really big gains here. Biggest winners on the S&P this month. As for the January laggards, let's look at AppLovin, Intuit, and Humana. They were the ones that lost altitude. Fourth quarter earnings overall powered much of this month's run-up, and the earnings parade kicks into higher gear next week. Look at this calendar. It is crowded. Some 25% of the S&P reports next week. Monday, Palantir, Disney, NXP Semiconductor, Teradyne, Tyson Foods. They will open their quarterly books. Tuesday, AMD, Merck, Pepsi, Amgen, Pfizer. Wednesday and Thursday, big names here. Alphabet reports Wednesday, along with big drug makers Eli Lilly, AbbVie, Novartis, GSK, and Novo Nordisk. We'll also get Uber, Qualcomm, ARM, and more. Amazon reveals its numbers Thursday, along with Shell, Sony, ConocoPhillips. So many names here. Toyota, Philip Morris, Biogen, Centene, Under Armour. They wrap up the week on Friday. Which sector might power the markets in February? Here with $128 billion in assets under management, Wealth Enhancement Chief Strategy Officer and Investment Committee Chair Jim Cahn. Jim, let me just get you on the action today. At one point, the Dow was down 611 points. You can see the big comeback. The S&P had been down 75 points. Everybody's still in the red at the moment, but these intradays, what does that say to you about the market sentiment, whether it is the Kevin Warsh Fed nominee number or something else?
Yeah, I think today was all about Kevin Warsh. I mean, Kevin's a really interesting figure, right? 2008, he's out there saying, don't cut rates as the market's melting down, housing market's deflating, right? And yet we have a president who's out there pounding the drum that rates need to go lower, and he's the next Fed chair pick. Okay, so I think the market's very confused. Look at gold. Gold's down 10% today. Silver was down 30% at one point. Right? These are all signals that inflation is going to be tamed. That's what you'd expect if you got a hawkish Fed. Meanwhile, the market's down. Right? The market's down because the market actually thinks that Warsh is probably going to keep rates a little bit higher, which is going to make the investment, especially in AI, a little bit more expensive because the market has now turned. These large tech companies have turned to the bond market to fund their capex. And so I think that's what's happening today. There was a recalibration about what the future rate of interest, what the future path of interest rates is, as the market was adjusting the fact that Warsh, while he speaks as a dove, is probably a little bit more hawkish when it comes to inflation.
Yeah. Let's talk about what could do well here. Energy has been in the crosshairs and certainly watching. At one point, we were at $57 a barrel a couple weeks ago. Now we're at 65. There's the Iran picture here. You like energy.
I think energy is really interesting. I mean, the story in energy today was really when all the other commodities were down, energy, oil, was actually up.
Right.
Why was it up in the face of basically deflationary pressure as a result of sort of expectation of higher interest rates? Well, it was up because the tensions in the Middle East. I mean, it does look like at some point the U.S. can get serious here about striking Iran, trying to drive regime change. Now that could lead right to the closing of the Strait of Hormuz. We all know that a lot of oil, like most of the world's oil, actually comes through the Strait of Hormuz.
Okay.
And that's a
Jim
concern.
Cahn, our thanks to you.